prices are lower, but they're still historically at pretty good levels. And the challenge is on the cost side because with the higher incomes we had in 21 and 22, we saw production costs take some pretty big jumps, and part of that's inflation, part of that's just markets adjusting to higher incomes. And as you said, Stu, we had some pretty high fertilizer costs in 22, a little easing off, I think, for 23, and maybe more so even for 24. But even fertilizer prices are still high by historical standards. So other input costs, there maybe isn't as much relief. We continue to see labor costs creep up and challenges there. Interest costs are now obviously much higher with the interest rate hikes we've had in the last 18 months. And so, yeah, 2023, I think we're still looking at, positive farm income levels, but kind of a return back to kind of more in that ballpark of where we were from 2014 to 2019, which is quite a bit off of what we had in 21 and 22.
What should farmers be thinking about as far as making sure that they've got something that's positive at the end of 2024 when they really need to balance their books a year from now?
Yeah, so I mean, when we get into a tight margin environment like this, it's not the sexiest kind of solutions and strategies that I think are the ones that work. So farmers, I think in general, they get excited about kind of the agronomic side of things and really focusing on yield, which is obviously very important. But I think marketing is kind of the other one that farmers go to, and I think what we see is, anyone can hit a home run in a given year, but it's really hard to do that consistently through time. And so, especially in an environment that we seem to be entering right now where margins are basically zero or maybe not even zero, anytime you can identify a profitable marketing opportunity, you should be taking advantage of it. And that requires a pretty good handle of the financial side of your business. And so, bankers love to hear this. Farmers don't always love to hear it, but having a good set of financials put together, knowing your cost of production, so you can identify those marketing opportunities really becomes crucial.
I think some farmers may already be making some moves toward that because we've seen the farm machinery companies saying we're not selling much these days.
No, and that again, I see a lot of parallels to where we're at right now to where we were in 2013. So we had multiple years of high incomes. Farms invested in machinery. Part of that is just you have income, you reinvest in your business. That's a natural thing in farming as well as other businesses. There's some tax management, tax strategies associated with that behavior as well. But then we saw a serious decline in a lot of those capital purchases because that's one area where you can kind of change and make an adjustment. Family living is another area that we see. Family living expenses really do track incomes, and so we'll probably see some belt tightening with farm households when we got the lower incomes in 23 and what we're looking at for 24.
The recent decision of the Federal Reserve to not raise interest anymore, hold steady, and then look toward 3 cuts in interest rates in 2024, that has to help out quite a bit.
Yeah, it definitely helps. I guess the one caution that I would have, and again, depending on how old you are, interest rates may not seem that high. I know the students in my classroom have never seen interest rates this high, but going back to the 80s, we've definitely saw that things can be worse. But I also don't see us in any short-term scenario, getting back to 3% or lower interest rates like we did see coming out of the pandemic. And so, yeah, I think it's optimistic. I think it's good news on that front to hear that we might see some lower interest rates next year. But I still think they're going to be higher than what we've had maybe the last 15 years.